Imagine waking up tomorrow and discovering that every country on Earth owes money, not just small countries, not struggling economies, every country. The United States owes over $38 trillion. Japan's debt is larger than its entire economy. Europe carries trillions more. Even powerful exporters like China and Germany. Even oil giants like Saudi Arabia. So here's the uncomfortable question no one asks loudly. If everyone is in debt, who is the creditor? Welcome to the hidden architecture of modern power where money isn't backed by gold, but by belief. Debt today is not a mistake, it's not an accident, it's not even a failure. It is the foundation. But to understand how the entire planet became a web of IOUs, we have to go back, not to Wall Street, but to war. In 1694, England was running out of gold while fighting France. The crown needed money fast. Instead of raising more taxes immediately, it made a revolutionary decision. It borrowed from private merchants and promised to pay them interest funded by future taxes. To manage this arrangement, a new institution was created, the Bank of England. That moment changed history. For the first time, a government could spend money it didn't physically have as long as investors believed it would repay them later. In exchange, lenders received government bonds, tradable promises backed by the state itself, war financed by future citizens. France copied the model. The Netherlands perfected it. The young United States used it to fund its revolution and later its expansion westward. National debt stopped being shameful. It became a symbol of credibility. The more you could borrow, the more powerful you were. Fast forward 3 centuries, and debt is no longer a tool of empires. It is the bloodstream of the global economy. Today, global debt exceeds $300 trillion, nearly 3 times the size of the entire world economy. Governments borrow, corporations borrow, households borrow, banks lend, pension funds invest, central banks intervene. Every dollar is someone's liability and someone else's asset. So again, who owns the world? Let's take the United States as an example. Yes, foreign countries like China and Japan hold U.S. Treasury bonds, but most U.S. debt is actually owned domestically by American banks, pension funds, mutual funds, insurance companies, and even the Federal Reserve. In simple terms, America largely owes money to Americans. Taxes fund interest payments. Interest flows into retirement accounts. Bonds are used as collateral. The Federal Reserve buys bonds by creating new dollars. It's a circular loop. And this loop isn't uniquely American, it's global. Japan buys us debt. The U.S. invests abroad. Europe lends through international institutions. Developing nations park reserves in Western bonds. It's like a giant poker table where everyone borrowed chips from the player next to them. And the game only works if no one flips the table. Because here's the secret most people don't realize. Modern sovereign debt is not designed to be repaid. It is designed to be rolled over. Governments don't plan to eliminate trillions in debt. They refinance it, issuing new bonds to pay off old ones. As long as investors trust that interest payments will continue, the system survives. Debt becomes permanent. Interest becomes the real product. Think about that. When you take a loan, you're expected to clear it. When governments take loans, they're expected to maintain them. Why? Because government bonds are the safest assets in global finance. Banks use them as collateral. Pension funds rely on them for stability. Central banks treat them like money itself. If a country like the United States suddenly paid off all its debt, global markets would panic. The supply of safe assets would shrink. Financial institutions would lose their foundation. Deflation could spread like wildfire. Ironically, paying off the debt could break the system faster than keeping it, so the machine keeps moving. Confidence is the fuel, but confidence is fragile. We've seen what happens when belief cracks. Greece in 2010, Argentina's repeated defaults, Sri Lanka's currency collapse. When investors lose trust, interest rates spike. Governments are forced into austerity. Economies shrink. Ordinary people pay the price. And that reveals another uncomfortable truth. When we say we owe it to ourselves, that's only partly true. Interest payments don't distribute evenly. They flow upward from taxpayers and workers to institutions and investors who hold the bonds. Debt isn't just a relationship between countries, it's a relationship between classes. Those who own debt earn stability. Those who service debt fund that stability. That's why rising global debt often walks hand in hand with rising inequality. But here's where it gets even more unsettling. At the very top of this system, there isn't one villain. It's not just China, not just Wall Street, not just central banks. It's the structure itself. Governments issue debt, banks multiply it, investors trade it, citizens depend on it. The line between debtor and creditor has blurred beyond recognition. Your pension fund might own government bonds. Your taxes might fund the interest on those same bonds. Your bank uses them as collateral. Your central bank creates money by buying them. You are both inside the machine and powered by it. Debt once meant bondage. Today it means balance. But balance only holds as long as trust does. The real secret of sovereign debt isn't that it's too big to repay. It's that repayment was never the goal. The goal is belief. As long as the world believes governments will honor their promises even if they refinance them forever, the numbers can grow. But if belief fades, the illusion ends. And we remember what debt really is. A promise stretched across time. A claim on the future. and a future that cannot expand forever. So the next time someone says, every country is in debt, don't just ask how much. Ask the more dangerous question: if everyone owes and everyone owns, what happens when the world stops believing in itself?